Welcome to our animation video on bank reconciliation statement. Before knowing what BRS is, do you know what cash book and passbook are? Cash book is a financial book which contains all cash receipts and payments including bank deposits and withdrawals. Every transaction recorded in a cash book has two sides, a debit and credit side. The difference between the sum of credit and debit balance gives the balance of cash at hand or bank account. The cash book is maintained by the firm or organization. There are three types of cash books: single column cash book, double column cash book, and triple column cash book. Passbook or bank statement is a copy of the account of the customer as it appears in the bank's books. Bank transactions are recorded in the customer's account and a copy of it is given to the customer. This implies that the balance of the bank column of the cash book should tally with the balance of the bank passbook. However, due to various reasons, these balances do not get tallied and thus we prepare a statement called bank reconciliation statement to know why are they not getting tallied. BRS. What do we mean by BRS? BRS stands for Bank Reconciliation Statement. BRS is a statement prepared by the account holder on a particular date to reconcile the bank balances per cash book with the balances per bank passbook. BRS is not a part of bookkeeping but is a method used to prevent any errors in the bank transactions of the cash book. Importance of BRS. It brings out the errors, if any, committed either in cash book or in the bank passbook. BRS shows the actual bank balance. Undue delay in the clearance of checks deposited can be known from BRS. It also helps in verifying the accuracy of entries recorded in the cash book. Do you want to know more about BRS? Don't worry. We would be covering various contents for BRS in this video. We would be covering causes for differences between cash and passbook, impact on cash and passbook by these causes, practical life illustrations,
reasons for differences between cash book and passbook. The reasons can be classified under three categories: difference due to timing, transactions recorded by the bank, and errors. There are two major reasons under difference due to timing. They are checks issued but not yet presented for payment, checks deposited into the bank but not yet cleared. The reasons under transactions recorded by the bank are interest credited by the bank but not recorded in cash book, bank charges/interest charged by bank but not recorded in the cash book, interest and dividends collected by the bank, direct payments by the bank, direct deposit into bank by a customer, dishonor of a bill discounted with the bank, bills collected by the bank on behalf of the customer. Errors in recording transactions or omission of transactions either on cash book or on passbook can also cause difference in balances.
It was nice to meet you. Now let's ride away to the next topic. Let's see how daily transactions affect the cash book and passbook. We shall also see how these are corrected. 1. Check issued but not yet presented for payment. Here, amount is not debited from the bank, but we have reduced our cash book. So, in order to correct it, the amount must be added to the cash book, if we start from cash book balance. Otherwise, if we start from passbook balance, the amount must be reduced. 2. Check deposited but not yet cleared. Here, the amount is added to the cash book, whereas the amount is not credited in the bank passbook. Thus, the amount has to be reduced from the cash book, if we start from cash book balance. Otherwise, if we start from passbook balance, the amount has to be added. 3. Interest charged by bank. The amount is added to the passbook because interest charged is debited to the bank account. Hence, Balance as per passbook decreases. The amount is added to the passbook when it is taken as the base. The amount is subtracted from the cash book when it is taken as base. 4. Bank collected dividend. Balance as per pass increases as the amount credited in the books of bank is not recorded in the cash book. Hence the amount is deducted from the balance as per passbook when it is taken as the base. Similarly, the amount is added to the balance as per cash book when it is taken as the base. 5. Errors committed by the bank. This is divided into two categories. The first one is receipt overcast or payment undercast. The second is payment overcast or receipt undercast. Receipt overcast or payment undercast. In this case, the difference amount must be added if we start from cash book balance. If you start from passbook balance, the amount must be subtracted. Payment overcast or receipt undercast. In this case, the difference amount must be subtracted if you start from cash book balance. If you start from passbook balance, the amount must be added. 7. Errors committed by the firm. This is divided into two categories. The first is receipt overcast or payment undercast. The second is payment overcast or receipt undercast. Receipt overcast or payment undercast. In this case, the difference amount has to be subtracted, in case you begin with cash book balance. If you begin with passbook balance, the amount has to be added. Payment overcast or receipt undercast. In this case, the difference amount has to be added, in case you begin with cash book balance. If you begin with passbook balance, the amount has to be subtracted.
Checks deposited but not recorded. In this case, the bank passbook gets credited whereas the cash book balance remains unchanged. Thus, the amount must be added if we start from cash book balance. If we start from passbook balance, the amount must be subtracted.
Bills of exchange dishonored. Here the bank passbook gets debited whereas the cash book balance remains unchanged. Thus, the amount must be subtracted if we start from cash book balance. If we start from passbook balance, the amount must be added.
Amount directly deposited in the bank. Here the bank passbook gets credited whereas the cash book balance remains unchanged. Thus the amount must be added if we start from cash book balance, whereas if we start from passbook balance, the amount must be subtracted.
Direct debits and payments made by the bank. Here the bank passbook gets debited whereas the cash book balance remains unchanged. Thus, the amount must be subtracted if we start from cash book balance. If we start from passbook balance, the amount must be added.
Let's see an example of how BRS is done. Mr. Ajay is the proprietor of Ajay Private Limited and he compares his cash book and passbook on 31st October 2020. On 30th October, Ajay and Co.'s cash book showed an overdraft of Rs 1 lakh. On 28th October, he deposited a check of Rs 27,500 in his bank, but the amount didn't get credited till now. As per standing instructions from Ajay, the bank debited Rs 12,500 from his account to pay the shop rent. On 29th October, a check of Rs 17,500 issued by his creditor Mr. Guna was dishonored. A receipt of Rs 5,000 credited to his account was wrongly entered as 50,000 by the bank. On 30th October, Ajay Private Limited issued a check for Rs 15,000 to Hari Stores, but the bank didn't debit the amount till date. So, let's get started to prepare the BRS. First, let's analyze the problem. This is the gist of the question. Take some time to see and understand. Please pause for a while if you find it difficult. For convenience sake, let's see the pointers to solve the BRS using the concepts that you have learnt. Now, we are just one step away from preparing the BRS. Wow, we have just prepared the BRS for Mr. Ajay and he would be glad that his cash book and passbook balance would match. Let's see one more example on BRS. Meet our friend Shankar, a book dealer who is the proprietor of Shankar & Co. He compares his cash book and passbook on 31st October 2020. As on 30th October 2020, his SBI bank account showed a positive balance of Rs 5 lakhs. On 28th October, he went to the bank and deposited a check of Rs 50,000, but the amount didn't get credited till now. On 29th October, he gave a check of Rs 1 lakh to Mohan Books & Co. for the purchase of new guides. The amount was not debited till 3rd November. Later on the same day, Arjun, his creditor, paid Rs 10,000 into his bank account directly without informing him. On 30th October, Shankar made an e-payment of Rs 75,000, but he wrongly credited Rs 57,000 in his cash book. He further received Rs 2,500 as dividend from Amazon shares, which he forgot to notice. On 31st October, the bank debited Rs 499 as bank charges and also gave a credit of Rs 1,000 as interest on deposits. Now, let's help Shankar in preparing the BRS. Now, let's analyze the problem. This is the gist of the question. Take some time to see and understand. Please pause for a while if you find it difficult. For convenience sake, let's see the pointers to solve the BRS using the concepts you have learnt. So, let's hit the nail on the road. Solution is coming up. Wow! We have just helped Shankar to prepare his BRS. Mr. Shankar is happy now.